How you doing? I'm Big D. Welcome to my show. I do appreciate each and every one of you that have stopped in to actually take a few minutes of your day with me. What I have to talk about today, silver and a new policy in the Trump administration that is going to change how silver and many other critical minerals are valued. I think you want to stick around for this. So the U.S. president, let's go with the vice president first. J.D. Vance told a meeting of more than 50 countries on Wednesday aimed at boosting access to critical minerals that the United States will establish a system creating price floors for the commodities. Now, this is not just a headline. This is a massive, unprecedented shift in the global financial architecture that fundamentally alters the supply and demand dynamics of silver, and obviously more of the critical minerals out there. But we're talking about silver today, effectively signaling that the era of artificially cheap silver is coming to an abrupt and violent end. If you are holding paper contracts or sitting on the sidelines waiting for a pullback, you need to understand that the United States government has just declared its intention to prevent the price of critical strategic assets from falling below a certain level, which directly contradicts the relentless shorting strategies employed by the bullion banks on the COMEX. Now, this is the collision of two massive forces: the political will of the Western world to secure resources and manipulate paper derivatives and in the markets that those are in, depending on which critical mineral you're talking about. That has suppressed prices for decades. They have done this, in my opinion, illegally. And when you look at JP Morgan, they have been busted twice. One time, it cost them almost $1 billion in fines. But they made a lot more money on top of that. And they still do it to this day. You could see it in the crash on last Friday. You can see it, what's going on beginning yesterday again. It dropped all the way down. I heard $69 an ounce for an ounce of silver. Now, derivatives market has suppressed prices for decades. But before we break down exactly this price floor mechanism, which will trigger a historic short squeeze, I need to point out something alarming. Most people that come onto my show, and I am not going to beg, but you're not subscribed. And if you want to hear some details that might make you some money that you're not hearing most other places, please subscribe. Okay, I'm begging you, please subscribe. I would like to at least get to 600 subscribers in a very short period of time. I am hoping that maybe you will give me a hand. Okay, let's get back to the show. Now, that is a statistic that leaves the vast majority of you vulnerable to the mainstream narrative that is designed to keep you in the dark. Mainstream media is not there to help you out. Shows like mine, I help you out. Some have purchased silver on my discussions with them over the years. Yes, I had a show before this. I am coming back to YouTube, trying it out again. It's totally different, but I want to try to help out more people. So while the insiders accumulate physical assets, we are building a commodity anchored in reality, not hype. So if this unfiltered real-time analyst is cutting through the noise and helping you make a clearer decision, hit the subscribe button. Now, to protect your portfolio from the ignorance of the masses, if this adds value and you want to signal the algorithm that you demand the truth, then please do so. Now ask yourself, what pattern do you see in this scenario? Look at the price action on the screen, wherever you get your price of silver, whether it be JM Bullion, Kitco, whatever you use. Now, we see a relentless attempt to push silver down every single time it approaches a key technical level. Specifically, the rejection we just witnessed during the New York session, where paper sellers dumped millions of ounces of national silver in a matter of minutes. This is not natural marketing behavior. This is a desperate attempt to paint the chart and trigger some losses before the new policy framework takes a hold. And I do believe they knew about this. I think the heads of JP Morgan have been at the White House and also at Mar-a-Lago for different meetings over the last several weeks. Now, the technicals are screaming that the repricing is imminent. We are seeing price action flirting with $150 EMAs, a critical move average that often dictates the trend for institutional algorithms. When the price dips below this level, the machines go risk off, triggering automatic sell orders that cascade through the futures market. This is exactly what the manipulators want. They want to flush out the weak hands and accumulate your positions at a discount. That's why they dumped the paper and brought the prices down considerably. I think yesterday it was just $95. It dropped all the way down to about, I think, right around $69. It's back up before I started the show. I think it was $78 we were back up to. So, but here is where the game changes. The announcement from the White House regarding the price floors for critical minerals acts as a massive backstop that the algorithms haven't priced in yet. Now think about what a price floor means. That means the government is stepping in to guarantee a minimum value for these commodities to ensure domestic production remaining viable. They are essentially telling the market that they will not allow silver, a critical mineral for green energy, military technology, electronics to trade, etc., having it below the cost of production. Now this creates a hard floor, a safety net that removes the downside risk that the short sellers rely on to make their profits. Now, if the government is willing to buy or subsidize at a certain level, the capacity for the paper market to crash the price to zero or even significantly lower becomes mathematically impossible. This is to put options for the state that investors have been dreaming of. We are watching a restructuring of the entire price mechanism where the strategic value of the metal is finally being acknowledged over the speculative value of the derivative contracts. The disconnect between the spot price and the physical reality is widening to historical extremes. And those who ignore this policy shift will pay dearly when the inevitable snapback occurs. Let's look at the hard data because the numbers coming out of the Colmax vaults are absolutely staggering. In February alone, we saw delivery notices for over 14.8 million ounces of silver. To put that into perspective, that is a massive amount of physical metal moving out of the registered category into the hands of the strong buyers who have no intentions of selling it back into the market. This is what we call very massive. Metal that is effectively disappearing from the tradable supply, while the paper prices is being smashed down by future contracts that represent silver that doesn't exist. The smart money is standing for delivery and draining the values in the vaults at a relentless pace. we are seeing a divergence in open interests. That explains everything. Usually, when the price drops, open interest should decline as traders close out their positions. But we are seeing open interest remain stubbornly high or even increase on the dips, while indicates that the commercials are adding to their short positions in a panic while the physical buyers are absorbing everything they throw at them. It is a game of chicken, where one side is infinite paper and the other side is infinite metal, or finite metal. But the introduction of the governmental mandated floor of the price for removing the infinite paper advantage. Now, if the price cannot go below a certain threshold, the shorts are trapped. They will be forced to cover, and when they do, there won't be enough physical silver at these price levels to satisfy the demand. Now, leading to a scramble for metal that will send premiums skyrocketing. We also have to consider the Shanghai premiums. Right now, silver is trading significantly higher in Shanghai than it is in New York or London. This arbitrage opportunity is causing physical metal to flow from the west to the east, further depleting the COMEX inventories. The Chinese understands the game. They are accumulating real assets while the Western markets play with the paper. The Vice President announcement is a direct response to this. The U.S. knows it cannot afford to lose the resource war to China. By establishing a floor price, they are trying to incentivize a domestic mining and processing to secure supply chains. This is a matter of national security. You cannot build missiles, satellites, or solar panels without silver. If the price remains suppressed by paper manipulation, mines go out of business. Supply dries up, and the U.S. becomes dependent on foreign adversaries. That is a scenario that the Pentagon will not accept. Therefore, the price must rise. If not just about inflation or currency debasement anymore, it's about the survival of industrial base. The government is effectively stepping in to break the manipulation because the manipulation has become a threat to national security. This puts a floor under the price that is far higher than the current spot price, meaning the downside risk is virtually zero, while the upside potential is explosive. Now let's connect this to the macro context, because you cannot view silver in isolation. The stock market is showing signs of severe stress. We are seeing a risk-off sentiment sweeping through Wall Street as yields spike and realization sets in that the economy is slowing down. Now, typically, in a liquidity crunch, everything gets sold, including gold and silver. However, this time is different because of geopolitical restructuring. Central banks are buying silver, gold at record paces, rejecting U.S. treasuries in favor of hard assets. This is the diversifying away from the dollar system. When you combine a stock market correction with sovereign debt crisis, capital flees to safety. Silver, with its dual role, are monetary metals and critical industrial components protected by a government price floor becomes the ultimate safe haven. The selling we are seeing in the paper market is liquidity event where leveraged funds are dumping their winning positions to cover margin calls and the losing tech stocks. This is a temporary phenomenon. Once the dust settles, the smart capital will realize that silver is the only asset that is both undervalued and strategically essential. The cheap silver era is over because the fundamentals of supply and demand backed by government policy simply will not support these low prices any longer. We are witnessing the final shakeout before the repricing event. Here are the three things to know, takeaways from this situation that you need to burn into your brain. Number one, the U.S. government official policy shifts the established price floors for critical minerals into catalysts that changes everything. It validates the thesis that silver is undervalued and strategically vital. This policy puts a backstop on the price and creates a nightmare scenario for the bullion bank shorting of the metal. They are now fighting the U.S. government, and history shows that you do not fight the Fed or the White House when they decide to manipulate the price upwards. Number two, the physical market is screaming shortage. The 14.8 million ounces delivered in February, combined with the draining of the COMEX vaults and massive Shanghai premiums, proves that the real market is decoupling from the fake paper market. The physical buyers are calling the bluff of the paper sellers. We are running out of available registered silver, and when the vault runs dry, the price will be set by whoever holds the metal, not by a trader in New York clicking a mouse. Number three, the technical rejection we saw at the resistance level and the dip below the 150 EMA is a bear trap. It is designed to scare you out of position right before the move goes higher. The algorithms are programmed to exploit human psychology, making you feel fear when you should be feeling greed. Do not get them to shake you out. The fundamentals have never been stronger, and the technicals are being painted to create a false narrative. In conclusion, you have to look at the big picture. We are in a period of massive transition. The old world of paper assets and unlimited debt is colliding, and the new world of resources, scarcity, and strategic craziness. I can't even come up with a word, but let's just go with that. Now, silver sits right at the center of the storm. The Vice President of the United States has effectively told you that the government will not allow these assets to be cheap anymore. They are putting a floor in. They are restructuring the market to favor production over speculation. If you are still looking at the spot price and still silver is weak, you are missing the forest for the trees. The spot price is a lie. The premiums are the truth. The delivery numbers are the truth. The government's policy is the truth. Do your own due diligence. Look at the numbers yourself and don't rely on the mainstream financial media to tell you when to buy or when to sell either. They will tell you to buy when silver is 50 or 100 and then the opportunity is gone. The window is acquire physical silver at these suppressing levels is closing rapidly. The establishment of price floors is the final nail in the coffin for the short sellers. We are watching the end of the era and the beginning of a new commodity super cycle where real things have real value. Invest with logic, not hype, and position yourself accordingly before the rest of the world wakes up to what is happening. Keep your eyes on the physical data, not the paper. Thank you for stopping in. I do appreciate it. And please subscribe. I really, I am begging you now. Get me to 600 subscribers. God bless. Have a great rest of your day and an amazing weekend. And if you like the Super Bowl, have a good time.